is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. And we're going to take a look, initial question, just to kind of get going here. We're going to take a look at the indices profile heat grid. We're going to kind of circle the wagons a little bit here on the globe. And as you can see, the daily, I mean, good Lord, this is, we got a big report tomorrow, Friday, got the jobs situation. I think everything is just completely going to rattle around here. I don't know if anybody's going to be taking any big chances on the long side before that. So I feel like you've actually got a decent opportunity to kind of range trade right now if you're looking to day trade something when it comes to trading the S&Ps. And, before we get into the global scene, I want to see if we can go back to my, my server with the, why do I have, okay, I lost that server. Here we go. And here we go. I want to make, you guys can see the chart, I hope. If you can, just send me a message. Yeah. Okay. I am flying a little bit blind here when it comes to communicating with TFNN, because my Yahoo, for some reason, is malfunctioning. But the situation on the weekly, we talked about this 1975 area. We're obviously, just kind of etherly above that right now, in my opinion. So what do you do with this now? I mean, you've got the breadth that has been really positive. You're in a little bit more of an overextended state when it comes to the breadth. We're going to talk about that a little bit. And, the question is, do you use 75 as support now? I think for today in particular, we talked about, if you haven't been watching the show, this has been the mechanism. We've talked about, this is the daily. We've been buying support and buying breakouts and looking for opportunities on the long side relative to that breadth being what it's been. And also relative to that breadth kind of crossing some borders on the long-term side on the weekly back in there in this time frame. Actually, it was kind of right in there, actually, I believe. But we talked about 75 not being like, okay, well, let's get there and let's go short. We've talked about let's just kind of take the weight off the table on the long side when we get there. And if you've been watching this show, I apologize because I've said that quite a few times. But that being said, what do you do from this morning to tomorrow morning? I personally feel like you're going to have that 75 now as a little bit of a support area for a day trade situation. And to be completely blunt, you've got the top of a profile on a 240 sitting there, I think 84, 74. You got about a 10-point range we're probably going to rattle around in, and we may get outside that, so make sure you put your stops. But, the 240s have been a really good regulator of the trade up in a lot of different products. That's the top of the profile on the 240. I don't see people really running for the door, but, after that report, if we just kind of start floating below 74, 75 tomorrow, I think we can look at that as a situation to possibly put some stops above on, and look at this as maybe a stake in the ground on the upside that may be able to be leaned against for a little while. With what's going on in the globe, I'm not exactly as shortish optimistic as a lot of folks out there right now. Every report I've seen is, the S&Ps have done what they're going to do on the bounce, and this is it, and it's time to start selling stocks again. I've read a lot of information on that, and that to me is usually, those guys are, when they all get together and say the same thing, you know what I'm talking about. It usually doesn't happen. So, right now I'm kind of a big fan of just sitting tight. There's a lot of unknowns out there. We've reached some targets. There's no reason to just continue to press the gas pedal, press your luck. I hate, any broker that's listening to this network does not want to hear me say this. because therefore they don't get a transaction by somebody pushing the button. But, you look at this global situation and you got commodities. Thomas talked about this. Andy Hex talked about this. I've certainly talked about it. We've had that relationship situation going on with the S&Ps and the globe and the commodities and kind of the best of the best, the safety haven. You've got a lot of other indices that are turning green on our profile breadth situation. And the question earlier, to go back to that question, I'm going to go into the S&Ps, and the breadth has been positive. But remember, we're also at a pretty extended level on the daily here. I mean, this is, we don't get up here that often. This is a pretty extended 67 minus 4. That's 63% kind of spread there. And here's our 1 hour, we're still positive there. Here's our 4 hour, still positive there. Our weekly, we crossed over. So right now, what am I expecting? I'm expecting, again, today into tomorrow, a little bit of a range trade situation. You got to wait for that report to come out. You have no idea how the market's going to react to it. And if you think about it, we've already kind of factored in seemingly some decent news. And what does decent news mean? Decent news means bonds and notes are probably not going to sell off. They're probably going to make, it's probably, it could be a dovish situation. And again, the party could continue, but we also could have some information that would come out. The market would take things differently. You just have to kind of wait and see how the market's going to react to these things and trade the reaction. I mean, you roll the dice before these reports. A lot of smart traders do not do that. They let somebody else go in there and figure out that problem. And if you're in before a report, then you're trying to adjust things later, and then you're trying to double down and catch back up if you're wrong. I mean, if you guys have been trading for a while, you know exactly what I'm talking about. It's not fun. It's not worth it. Trade the reaction. All right, so right now it's range trade, a little bit overextended on some of the breadth calculations. If you're going to, somebody puts a gun to your head and you got to sling some things around today before the report, range trade is probably the way to go. But wait until after the report, and actually waiting until the U.S. stock market opens a lot of times after those reports let's let the guys who are putting the money to work kind of figure things out, develop the trend, and just kind of ride their coattails. A lot of times trade that reaction. So talked a little bit about the XLE yesterday afternoon with Tom, and I'll be doing his show, I think it's today. I think I'll do his show this afternoon. I think that's what I've been mandated to do, and it's going to happen. XLE, we talked about this, having a new type of move up above some congestion area where we kind of made higher lows along the way. And I'm going to point that out. Then we're going to look for some opportunities when it comes to some of these energy related stocks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And Joey may come on the show today to talk about some of the definitions of the China relationships, the Hong Kong, the Shenzhen, Shanghai type, China A shares, B shares, all that. Let me see here, test. Yeah, I cannot read my Yahoo messages on so I can't communicate with the board over there. So if you get them, maybe you can type it in the den here, which will be awesome. So the XLE, we talked about this right before the break. I just want to, first of all, man, I mean, wow, Chesapeake Energy. Did you guys hear about this guy running his car at a high rate of speed into a brick wall yesterday? He kind of, I guess, pseudo got cleared of some, I guess he got indicted. And then I guess there was some decent news, and then all of a sudden he kills himself. Hate to hear stuff like that. Man, this financial world can drive people to do wacky things, and that's unfortunate. Some of you guys who have lost money in Chesapeake Energy, though, maybe cowboy justice, however you want to look at it. but I hate to hear stuff like that. There was a guy, Blue Marlin, up in Chicago. He was a risk manager. I don't know. Larry may know of this, and Tom may have heard of this too. It was a big prop group. This was back in when Yahoo was going up or down like 80 points a day. And, he saw all these day traders. This was when I was in Chicago. He saw all these day traders, pretty big prop group actually, saw all these day traders making all this money all the time. And he was the risk manager for Blue Marlin prop. And all of a sudden, and risk managers have controls to release or not release or whatever. And he decided he would go in and put, I think it was 20,000 shares of Yahoo. I can't see your IMs, Al. 20,000 shares of Yahoo overnight before a big announcement, because most of the announcements, Yahoo had gone straight up. And it was the internet days, and my God, things were insane. Yahoo gaps down 80 points on 20,000 shares. He goes and buys a Porsche that morning. Nobody could find him, and he drives the Porsche into a brick wall. So just uplifting comments today. Just letting you know these kind of things happen, and I don't know what this ends up meaning for Chesapeake Energy, but I'll tell you right now, looking at the sheer technicals, this stock's got a $4 lid on it. It's been an underperformer to say the least. It's been doing all right the last couple of weeks, but that's coming, that's coming down from 30, 40 bucks. And, it's a weak stock in a sector that's starting to turn. $4 is probably the lid on this. I'm showing the chart right now if you guys can see that. So taking a look at the XLE after we've gotten the nice rosy uplifting first part of this show out of the way of people running into brick walls. XLE, let's take a look at it. All right, so this is something we pointed out yesterday. I would consider this, even from a classical technical analysis standpoint, throw the profiles out the window. You've got a little bit of a breakout going on here, and this was something that was some pent-up frustration in this ETF. Higher lows, we talked about it for a while. We were looking for this pop. Crude oil, I'm going to go back to that really quick. I hate to beat a dead horse, but sometimes when you got some things going on, you need to press the gas pedal and talk about them. This 3346 has been a cool area to orient stops, wide profile POC. It's not going to be, there's no trade that's just easy and develops automatically. There's going to be some volatility here based on, put your stops in based on your appetite for risk. But if we meet our goals in crude oil, this XLE could kind of lead this idea. And those goals, 36.28, I did a little video on this morning. And I think TFNN is supposed to start posting those pre-market little blurbs. If you're getting, well, I think they'll be there all day. But I like the way this is acting, and I always have kind of pointed towards what's the better way to trade crude oil from the long side is probably to convert over to the XLE or trade some of the internals in the XLE. Let's go into the scanner here, and first of all, I want to point out a stock that actually, we were kind of high on before. It's this little stock SWN, and I'm going to pull up the weekly here, and this is the charts within the scanner. They're not the best in the world, but they definitely suffice, and you don't have to pay exchange fees to get real-time updates, which is kind of cool. We looked at this as hanging in there, showing the strength. But we always look at, I just want to remind people, this is a good case in point. We always look at kind of the next time frame down of what we're kind of basing a lot of our progress on to try to regulate the trade. So here's the daily. And when we start breaking down on these kind of lower term time frames that kind of regulate the trade up, we have to have something to orient stops around based on, what we're trying to do with the stock in general. So, SWN, I don't think there's a ton of risk in trading this stock from the long side. But if you're looking to try to, find opportunities to trade it again, I mean, the daily piercing of this bottom of this profile around $8, again, was kind of a trailing stop out kind of situation. I haven't had this on the board in a while. And if you guys, again, somebody had asked me to kind of look at this again, we're kind of hovering around the bottom of a profile on the weekly here. Let me pull this up on eSignal really quick. And again, we're going to get into hopefully some decent plays here. But, that daily kind of caused us to kind of, get stopped out a little bit there, maybe try it again in this general area. Another week, kind of getting into the bottom of our weekly profile again. I'm still not looking at this stock really from a very attractive standpoint until we get back above 654. So that's my stance on SWN. It was kind of wild how this thing kind of ran out of gas, but provided some good energy for a while. Here's the daily, and dims to breaks when we start, breaking down. I mean, trading's trading. Kevin Hinckley said something really, really important yesterday. I happened to watch Thinkorswim or listen to it in the background is it from 11 to 12 or 12 to 1? I can't remember what time that show is, but and I don't listen to it that often, but he said something really, really important. Is it 12 to 1? Okay, cool. His mentor said, your goal is to be able to, I'm paraphrasing, is to be able to come back and trade the next day. That's your goal every day. All right. So that being said, situations like this with SWN, don't get married to things. Things can change in the trading world. They don't have to make sense. And what Kevin said was just so spot on. It was like, yes, that is the mentality of a floor trader. And that's not a bad mentality for a lot of guys looking at these screens every day. We're going to be right back. We're going to talk about hopefully some decent plays in the XLE and the internals. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I'm still hoping we can try to get Joey Zhang on with us to talk about these this China situation. Al, I can't read your comments in the Yahoo, and that's probably my fault. But let's just keep moving forward. I've got COG up. I know somebody requested to look at COP, ConocoPhillips, and we looked at SWN, and I want to just kind of really map this. Okay, so this is one of the stocks that was showing itself early before, if you remember, if you've been watching this show for most people watch this show for a day and never come back because it's just the way I admit myself. But if some of you guys have been hanging in there, COG was one of those stocks that we tried to kind of put on the radar screen, and we talked about that regulation of the trade with the next time frame down, the daily. And I just try to keep it really simple, block out one side of the marketplace, let the profiles kind of stop me out of things and find support situations like that. Alternatively speaking, relative to that SWN argument to get out of the trade, and again, these are all in the cell structures of the scanner. I'm just showing you a snapshot chart here. COG kind of acted well. We were able to kind of pick those things, and now we got another breakout. And you know, I hate to get carried away with this. This is today's action got a new. This is our 60-minute. I'm just trying to find out the price. The cool thing about the scanner is these are real-time price derivatives to create these levels, and we're not giving you. See, you can't figure out what the price is. You're just getting a visual. I'll probably end up going to federal prison for that. But it's a cool way to kind of really look across the globe, because we're dumping, really real-time prices into these things, and you guys get the benefit of that. And I just focus on the S&Ps because this is a generally speaking, U.S.-related show. So, but you can go in here and see the same situation on a lot of different instruments across the globe. Okay, COP. Let me get into that too. Just wanted to state that about COG. COP. Well, you know what? I can't argue with what's going on here, and this had kind of found support the same way for an intermediate trade up. But if you look at the weekly, you got a little bit of something here to overcome, and that unfair height 36.25. I think we closed a little bit above there yesterday, but I to really get the worm is turned type feeling on this, I'd love to see this weekly close above this. And again, you've got a breakout kind of in process here. Pre-market, you're trading 36.07, so you're back within this weekly profile. This is not probably the best case scenario to find an oil stock that's probably the rosiest situation. So my answer to this is you still got a little bit of a headwind here on this. I think you've got better stocks that are showing their self in the XLE. I'm just going to kind of pull up some things that have really kind of blown through weeklies and dailies already. You got RRC sitting here weekly, and this is did I say enough? That's seemingly my fallback phrase there. 26.25 unfair highs on the daily. 25.42. So I'm looking at this, kind of looking at that particular range as support on this. I like how this is acting. I think it's got a lot more ability to move north rather than something like the COPs of the world. Again, you got that top sitting there. And by the way, Joey says that he's ready for a phone call, Al, if we can hook that up. I did promise this. Just let me know when you got them. If we can get them. If not, that's fine too. But you've got some other things on the board here to pay attention to. You've also got some. Okay, great. We'll do the call during the break. I'll just let him know. Sorry about that, guys. You can do different sorts here in the XLE and find things that you're looking for. Let's just say we want to look at let me just resort that. We want to look at things that are sitting at the top of the profile in the weekly. So if we do a sort there and just put top in right there, obviously ConocoPhillips is sitting at that weekly unfair high, and I want to just kind of look at these. These are ones I'd want to put on my radar screen. It's not, again, the rosiest situation in the world. If we get closes above that 25.56 on, for instance, an OKE, and we have a Friday close above there, I'm going to feel much better. As you can see, going back in time, just looking at these snapshot charts, I mean, this would be considered kind of a break-in trend when it comes to, factoring in relative to profiles. So that's what that means. Okay, you get that kind of picture. And we're gonna look at ExxonMobil really quick. This is one, and I'm gonna look at this relative to the scanner in just a second. But ExxonMobil has really kind of gotten on its horse. We have a wide profile. We looked at that PSC. We talked about not trying to buy some of these instruments as they kind of poke their head up too far. We kind of look for buying support. The powerful trade that's happened, I really fully believe we can easily reach 84.29 and maybe even a little bit higher, but you've got some serious resistance at 84.29 on ExxonMobil. So, what's the best bang for your buck? You probably got some better instruments to focus on the long side. I think this one might have kind of almost reached its limits when it comes to that. We're going to get away from the XLE really quick. We're going to look at the dollar. We're trying to put a new supply area on the dollar right now. I don't know if the dollar is going to be the best trade to get mega long on right now at this stage. I still think we can come back and retest this 97.50, 97.60. So this is kind of a sit and wait situation on the dollar right now. I don't think anything big time is going to happen, especially before that report tomorrow morning. Remember, all heck is going to break loose one way or the other. Let things shake out, as Tom would say, and then we kind of assess things. The hardest thing to do, again, is to sit in front of this machine sometimes and do nothing, but sometimes that's the best trade. Notes, the same situation. We are on support on the June contract, on the long term, on the weekly. Keep that in mind. Let's hit gold really quick. I hope we can get Joey on because I'm trying to just wrap up some usual suspect talk here. This is completely impressing me, actually. And this type of action, gold's not an easy trade, but we're just kind of crowding, higher lows. There's nothing to hang on to up here except for maybe looking at a breakout above 12.49 now and then trading that up into 12.65, maybe even higher. But again, that report's probably something we want to sit tight and wait on. We'll be right back, guys. Hopefully we'll have Joey.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, guys, I think Joey is not going to be able to get on today. The connection's not good. He's in Macau right now, which is a kind of a barnyard sound in general. Macau. He's actually in Macau. It's right off the coast of Hong Kong and China. That's an interesting place if you've never been there. It's kind of got some cool history. It's not just a gambling hub. It's actually kind of a cool spot as far as history goes. When the Portuguese, it's got a lot of, that type of scene over there too. Cool history. I'm looking at natural gas. I'm looking at the weekly. Joey always gets on me for going over here and gaining 25 pounds every time I drift back over this way and then go over there, and I get the comments about that. I always say, man, I've been on Jenny Craig more times than Mr. Craig. No, nobody gets that. Okay. Anyway, natural gas. Here we go. So, where's the bottom on something like this? I can't. I got to have somebody else fight out the battle at the bottom and then kind of get some upswing when it comes to looking at some profiles a little differently. And I just don't see it happening here. I mean, we just recently broke down below the dailies. And, again, there was a chance to pick a little battle around 1.711, but that's over now. I mean, Joey, are you on?
I'm on.
Hey, man.
Can you hear me?
Yeah. Let's talk. Let's talk while your connection's good.
Yeah. I'm gonna show you. Can I turn on my camera? Does that work?
Maybe. I don't know if that's gonna. Okay. I told everybody you're in Macau right now. Roughing it at a nice restaurant. Hey, are you there? Hello? Yeah, I think we're still having connection problems. So anyway, I'm going to continue. So natural gas, going back to this, it is what it is. You got to take stops. Things on the lows can go lower. And I just, to really get a bottom in natural gas, that weekly is going to have to put a stake in the ground and at least start showing us some kind of hint of a profile. Yeah, he's dropped again. Okay, cool. Some kind of hint of a new profile in the long term appearing. We had a chance to look at this on natural gas with a little bit of optimism around this 1.711, but again, those kind of hopes and dreams are dashed right now, and you need to kind of just probably wait until we either get back above that area, play the game again, look for that 1.915 up top. That's a decent risk reward, but right now it's just there could be lower lower numbers on this, unfortunately, for some of you guys who are trying to play around with this on the long side. I know it's crazy. I mean, I just got a propane tank, a huge one filled up here, and I was appalled at how cheap it was, which it's not natural gas, but it's, you know, kind of same wheelhouse. All righty, going back to the S&Ps, if you guys didn't catch the beginning of the show, 1975 report tomorrow, lit up top right now, 1985, 1975 down below. Just going to probably be more of a range trading situation than anything else. People are going to be adjusting positions today. I'm a little bit more bearish before this report as far as a day trading standpoint than I am bullish. So, again, I think you've got something to lean on around 1985. Remember, though, this index is weathering storms like there's no tomorrow. Okay, so Shanghai, again, had another kind of, update today. Targets right now on this are going to be at around 3,000, 3,056. U.S. stock market likes that action in general, but again, this is kind of a wait and see. There's that 3,000, 3,050 on the Shanghai. God, I really want to get Joey on. We've been talking about this for a while. Also, we're going to look at Apple. We had a little bit of a breakout here that we talked about. If that happened, then next stop up is going to be this 104, and why 104? There's a really big unfair low at 104 in general, and right to the point, and then 104.29s before. So any type of, let's all pile back into Apple and this thing's going to reach its highs again. I just think you're going to have some serious headwinds around 104. So keep that in mind when you're trading this stock. If you're trading it from a bounce standpoint, breakout above 97.63, which is basically what it did day before yesterday, then that's going to be something to keep in mind. Yeah, we could try them again on the next break. Let me just tell them. Sorry, guys, for the delay. Okay, here we go. All right, so we're going to go back into the scanner really quick, and we're going to take a look at some utility stocks, because this is something with the 10-year coming off and breaking down technically. Remember, this was that dividend yield versus treasury type play, and people were piling into this, and we had some, and I'm going to show the XLU in general in just a second here. XLU. Then we're going to look at some internals. Not exactly looking terrible. We talked about support on this 45.66. I'm not a huge fan of the bonds and notes selling off tremendously. So I think the XLU is kind of portending that thought, or foreshadowing, or however you want to call it. 45.66 support on this. Remember, we're not exactly out of the woods as far as rates going up. And let me reference the 10-year really quick while I'm talking about that. And this is the June contract. We had that breakdown, but again, this is the June contract. Again, we're going to be looking at, and again, we're on support on the June almost here. This is the June weekly, 129.02. So remember, XLU on support, notes on support. We got a big report tomorrow. Notes getting back above 129.21 could really put the XLU on gas again to go north. So keep that in mind. So let's go back to the XLU. And even though it's the seller dweller as far as, ETFs and instruments that have gone straight up lately, you still have a chance to do relative strength trading on this. And if you look at this across the board, I mean, you can kind of find opportunities here if you have this, and you can find inflection points to lean on. I don't think it's over for the XLU, and I'm not such a huge fan of the notes selling off. So again, this unemployment report that comes out, I mean, people are now, waiting patiently for that. But after that report, if you've got some bearing on the notes in general and the bonds, you can look at some of these XLU stocks as kind of a way to trade that. I'm going to look at CMS Energy Corp. I mean, a lot of these have have really stayed strong and have come down and, found support and have kind of, are really still at bare minimum in the balanced area, CMS being one of them. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Staying in the utility vein, this is something I want to point out. So here's FE. The stock is called First Energy Corp. One word, First Energy. Go figure. You might look at this and say, well, hey, John, this stock's sitting at the unfair highs on the daily, the unfair highs on the weekly. But what I want to point out is, and let me see where we're at pre-market if we got any prints going off here. Not yet. This is one where, in my opinion, you're looking for the breakout here because it's, I'm expecting maybe notes and bonds to kind of drift up a little bit here. I may be wrong. But, in that case, these stocks may be just sitting on the launching pad. And when these things start clearing some of the levels here, a lot of folks will have to start covering on the short side. So you may get a pop on things like this. I'm not looking, this is one I'm definitely not looking at from the short side, even though we're kind of reaching these inflection points. And when I go back into the scanner and I look at FE, you'll see top. And you might go, oh, well, God, this is a great shorting out. No, that's not the way I'm looking at this. You're looking at this as keeping on the radar screen and maybe looking at this to push forward through those levels in general. We got to take a look at some currencies. I got to toot the horn a little bit about the Australian dollar here. This is something we've been expecting, getting above 71.69, playing the game again. And we talked about, this is a pretty big move here. And 74.39, we talked about this relative to the commodity plays going on, really holding in there like a champion when it came to all the mess going on in China, the iron ore prices, just commodities in general. We got these higher lows on Navigator, lower lows on price action here a couple of times while that was going on. And then we're able to base something around waiting patiently until we broke back above 71.69. So again, I think this is really, really positive. I think 74.39 is a foregone conclusion in this now. And I actually think we could get back up into the 80 range on this currency ultimately. But, we'd have to kind of take this step by step. Canadian dollar, kind of similar situation, really acting pretty well relative to crude oil, becoming valued again. My Canadian vacation has been put on hold. Just kidding. Yeah, nice folks up there in general. Here's the breakdown that we talked about, the 137.59 on the Canadian dollar. I think this is kind of a sea change event. I'm expecting commodities to go higher. I'm expecting oil to stabilize, and just oil stabilizing may kind of take the fear out of this particular currency in general. Ruble, similar situation, the Canadian dollar, just expecting this to meet targets ultimately down below at 69. That's the situation on that currency. The yen, we got to at least talk about this because I like how this thing's compressing up here. I like how the weekly profile, new weekly profile, attempting to appear down below. I think we could have a little bit of a stabilization in this and a chance to move up top. 113.72 would be something I'd base some stops around. Give it a little. Be a little generous with the stops. I think we could move up. Having some new inflection point targets on this. We're probably going to be looking at around 116 on this. So keep that in mind. Sorry we couldn't get Joey today, guys. We'll try it again tomorrow. Stay tuned. Larry's next. You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.